In India's banking landscape, there is one small private bank that has quietly transformed itself, cutting down the NPAs, improving the profitability, and winning back the investor trust. Its network may be limited, but its performance in the recent years tells a story of steady recovery and disciplined growth. A story that deserves to be told. I am Sebi George. Welcome to another story, the remarkable turnaround of DCB Bank. India's banking sector has been on a strong recovery path. After years of cleaning up bad loans, most private banks are now entering a new phase, one focused on sustainable growth and higher return on equity. While large names like HDFC Bank and ICICI continue to dominate, several mid and small sized banks are quietly building strong franchise in their own niche markets. And that's exactly where our focus company fits in. It may not have the scale of the giants, but it has shown remarkable improvement in key metrics from asset quality to profitability. With a disciplined lending approach, solid risk management, and steady expansion into secured retail and MSME lending, this bank has slowly earned back the confidence of both the customers and the institutional investors. Let us decode how this quiet performer, DCB Bank, has strengthened its fundamentals over the last 3 years. DCB Bank's interest income has been on a strong upward trajectory, rising from 3,513 crore in FY22 to 6,471 crore in FY25, delivering a healthy CAGR of 22.6%, and the increase was consistent. The steady growth highlights a solid expansion in the loan book and effective yield management, showing how the bank has strengthened its core lending operations year after year. DCB Bank's other income, which includes fees, commission, and treasury gains, has grown from 452 crore in FY22 to 751 crore in FY 2025, registering an 18% CAGR. After a mild dip in FY23, income rebounded strongly in FY24 and 25, reflecting improved business volume, higher transactional activity, and better treasury performance. DCB Bank's profit after tax has seen an impressive rise from rupees 288 crore in FY22 to 615 crore in FY25, a strong CAGR of nearly 29%. This consistent improvement reflects a better asset quality, higher net interest income, and disciplined cost control, showing that the profitability is scaling steadily along with the bank's growth momentum. For the past 12 quarters, DCB Bank's institutional shareholding has seen noticeable shift. FII is moved within a narrow band until FY24, then dipped sharply to around 9.6% by March 2025 before recovering to 11.7% in June 2025. DIIs, on the other hand, steadily reduced their stake from nearly 40% in FY23 to about 27% in FY24, but have since showed renewed confidence, climbing back above 31% in the latest quarter. The recent rebound in both domestic and foreign institutional interest signals improving sentiment towards the bank's fundamentals. By the way, this video is purely for educational and analytical purpose. I am not a SEBI registered investment advisor, and this is not a buy or sell recommendation. The data and analysis presented are based on publicly available information. Investors are advised to do their own research or consult a financial advisor before making any investment. DCB Bank's return ratios have shown a steady and healthy improvement over the last 4 years. ROE has climbed from 7.6% in FY22 to 12.9% in FY25, reflecting better profitability and improved leverage utilization. ROC has also strengthened from 7.1% to 10.4%, indicating more efficient use of the capital employed. The consistent rise in both ratios highlights the stronger earnings quality and disciplined balance sheet management, a clear sign of operational progress. Over the last 3 years, DCB Bank's PE ratio has gradually declined from around 7.5 times in March 22 to nearly 6.3 times by June 2025. This means the stock price hasn't risen as fast as its earnings, even though the profitability has improved steadily. Such a consistent earnings growth combined with a lower valuation multiple suggests that ECB Bank is currently trading at attractive levels, leaving potential for re-rating if performance continues. Let us talk about the dividends. For financial year 24-25, DCB Bank's board has proposed a final dividend of 1.35 per share. Historically, the bank has maintained modest payouts, 1.25 in FY 24 and 23 and rupee 1 in FY 2022. At current share price levels, this worked out to be a dividend yield of 1.04%. In short, the bank is cautious and conservative with its dividend, preferring to retain earnings for growth and capital adequacy. DCB Bank's book value per share has steadily risen from rupees 144 to 181, showing consistent internal value creation. This steady rise reflects healthy profit retention and capital efficiency over the years. With the stock currently trading at around zero point 0.7 times its book value, it indicates that the market is valuing the bank below its intrinsic worth, suggesting a potential opportunity for the long-term investors if earnings momentum continues. Over the last 3 years, DCB Bank has shown steady progress with consistent growth in interest income, improvement in asset quality, and a disciplined approach to lending. While margins remain under pressure due to rising competition in retail and MSME segments, the bank's strong capital adequacy and improving CASA base offer stability for the long term. As always, this analysis is purely for educational and research purpose, not a buy or sell recommendation. This goal is to help you evaluate whether DCB Bank's performance and the fundamentals align with your own investment outlook. I am Sebi George, and if you found this video insightful, don't forget to like, share, and subscribe for more company stories because every share has a story worth decoding. Until we meet again with another video, goodbye and thank you.